Okay, so it's starting to prep a bit. Sorry, just give it a second. It takes a bit of time to load and all that.
So you can actually stream onto YouTube from Zoom, can you?
Yeah. It's a new feature that I paid for now.
Okay.
So I just discovered it quite recently, and yeah, I think we are. Yeah, we are live.
Perfect.
So hold on one second. Yeah, we're actually live, by the way. So so this is Black Card Red Spade. My name's Adrian, as you all know by now, and I've got a very special guest on again. His name is Michael Brown. He's from Market and FX, the senior market analyst over there, and one heck of an interesting guy. You'll have a lot of fun listening to what he has to say. I learned a lot in the last conversation. We delved into so many different topics and so many different fields. If you recall here, Mike, I mean, it was just so vast and broad. And I very much look forward to hearing what's been happening on your end. So what's the latest updates? You know, the most interesting thing that you've seen in markets lately?
Thanks, Adrian. It's quite the introduction you've given me there. I'm not sure I'm going to be able to live up to that.
Come on, you always do. No, definitely. I give credit where it's due, my friend. You know, so you're more than welcome.
I think the most interesting thing that I've seen is really just a broad theme that is taking over pretty much every asset class you can think of, which is just liquidity. The market, we were just discussing a second ago, how the market is just awash with liquidity because of the stimulus that's been injected since March, since the height of the coronavirus crisis. And essentially what you're seeing at the minute is just the market taking the path of least resistance. Now, I'm not saying I'm suddenly becoming uber bullish on the equity market, because I'm not, but realistically, it's August. There is no one trading out there, or very, very few people trading out there. So what is the market going to do? If there's no bad news coming out, the market is just going to continue to plod higher. And that's pretty much what we've seen, you know, pretty much all month. And I think one thing that I did want to touch on is that there's this common theory that the stock market is not the economy, and I do agree with it to a certain extent. But then actually, if you look at what's going on under the hood of the market, we are seeing very, very significant differences between sectors. So if you look at, for example, what's propelled the market higher, it's been technology. It's been all the businesses, Apple, Amazon, et cetera, who are going to benefit from us shifting our lives into cyberspace, into virtual meetings like we're hosting now. And the companies that have struggled and that have been sort of bumping along the bottom have been those that are struggling as a result of the pandemic in travel, financials because of their net interest margins being crimped, energy stocks, et cetera. So the market pushing higher, but it's really not a broad-based recovery, and it is really reflective of what's actually going on, I think.
I fully agree with you, and it's very easy to evidence the point that you just made here by looking at the Russell 2000, for example, relative to the Nasdaq. I mean, it's like a canyon between the two of them. If you look at their relative recoveries, so essentially bricks and mortar versus tech or cloud, should I rather say? I think that's exactly pretty much what you're.
That's exactly what it is.
So it's gigantic. Sorry,
yeah,
go ahead, Mike.
If you think about what's happening in your daily life, no one goes to the high street anymore. Everyone shops online. Very few people eat out nowadays, especially in the US, where we're looking at. Everyone orders in. Very few people are going to their offices, as I can attest to. I'm sat here in the city of London. There's absolutely no one around. Everything has shifted online. So actually, it makes sense that tech stocks are flying higher and bricks and mortar businesses are tumbling. That makes complete sense to me. I still think that, the market at an all-time high does make me slightly uncomfortable, and the fact that we've recovered kind of 50-odd% of a bear market in 180 days is just astonishing. But what's actually going on under the hood of the market makes quite a lot of sense.
Yeah, but you and I both know that there's no way the market would have recovered without all that stimulus that we see. It's essentially, as to use a real world kind of analogy, well, what's happened over here. It's not just the equivalent of an athlete taking a steroid dose. This is an athlete that is attached to a steroid bloody drip or two, you know, that are literally just being constantly pumped into it, to use that very crude but very realistic kind of analogy, because without that, there is no way it could possibly perform at the levels where we are now. There's nothing justifying it, for one. And yes, okay, Apple and Microsoft and Google, all these companies have massive cash piles. No one's denying that. But you can't tell me for a second that Apple's valuation of $2 trillion is truly justified under current circumstances. There's just nothing that makes sense regarding that. Or Amazon, I mean, as I said to you before we even started, Amazon and Apple combined have a greater market value than Germany's GDP. That's just unfathomable to you.
But equally, I think we need to just throw comparisons out the window, because we've said since March, no one's ever seen coronavirus before, no one's ever seen a pandemic like this before, all the rest of it. No one's seen monetary and fiscal stimulus like this before. So actually, I think there's an argument to say these comparisons that we've used and relied upon in the past, these economic data points that we've used and relied upon in the past, maybe they're not worth as much as they used to be worth now in the current climate.
I think a PE doesn't actually mean a damn thing anymore. I mean, if you look at Apple, for instance, which used to trade at an average price, well, okay, for anyone who doesn't know what this is, PE is a price earnings ratio. So you essentially look at the price of the stock relative to the amount of earnings per share, and then you get an idea of how expensive it is. Sorry, I just thought I'd give a brief rundown in case anyone didn't know. But Apple historically traded at around 14 or 15 or so 15 times earnings. Now it's close to 40 times earnings just in the last few months. So that shows you how expensive it's become on that metric alone. But it doesn't mean a damn thing in today's day and age with all this liquidity, as you said, Mike.
Yeah, I think there's also an argument, and I've seen this put across well by a number of researchers, is that the tech sector is, one, defensive now rather than cyclical that we saw in the past, and two, I've just noticed the sun coming around. So I look like I'm coming to you from the center of the earth now with the sun coming behind me there.
That's okay.
And
beaming lights of wisdom towards us.
And the other thing to bear in mind is the fact that if you look at the bond market has typically been the safest thing you can possibly find, treasuries and all the rest of it. But the 10-year yield is at what, 70 basis points now, 65 basis points, somewhere like that. Real yields are deeply in negative
between
territory.
the two, yeah.
Real yields are deeply in negative territory. So it's almost those defensive equity sectors have become bond proxies. And as a result, that means perhaps more risk-averse investors than you would have seen in the past are buying into these technology companies, seeing them not as an opportunity for growth, but merely as an opportunity for protection and as a bit of a haven.
Yeah, that's actually a really key point that I wanted to bring up with you as well, is that, yeah, major equities such as Apple, you know, or your other tech ones, as you mentioned, are proxies for bonds because they're seen as the safest thing in the markets at the moment. And my theory is, given that it's a cloud, they're very cloud-based, so they're not going to be too affected by human interaction to the same extent that, say, I don't know, Walmart, for example, might be. Although saying that, Walmart has not done very badly, all things considered. I mean, Walmart has actually done surprisingly well for a bricks and mortar store, but I think that's online sales as well.
Yeah, and I think the other thing with Walmart, if you look at their Q2 results, I mean, how much of it was panic buying? You know, how much of it was the start of the coronavirus where everyone's going, oh my God, I don't know what's going to happen. I just want all the food I can find in the world and put it in the freezer. You know, how much of that drove their sales? Can they continue it? I'm kind of dubious. But the other thing with the tech firms, and especially with Apple, is that they're sat on a humongous cash pile and the Fed are buying their debt. So it is almost risk-free.
Yeah, it is essentially risk-free. I mean, Google, I saw they issued a 5-year note the other day. So for those who don't know, notes is essentially just a form of a bond. So you issue debt to raise capital. That's essentially how this works. So they issued a 5-year note for, I think, $10 billion at 0.5%. That is absolutely insane to see that they could issue that. And I bet you half of that will go towards stock buybacks to purchase their own stocks, because they said acquisitions, $5 billion of that would go towards acquisitions, but they didn't specify what those exact acquisitions will be. So technically that could be buying back their own stock and raising the stock price in the process. Nice.
Yeah.
A wonderful world we live in.
It's so close to being manipulation that it's annoying that it isn't it? Because it's not. It's perfect. They're allowed to do it, but it's just so tantalizingly close to being market manipulation. It's almost annoying that they're allowed to get away with it.
Yeah, but because if you and I were to go and do that, I bet you we'd be thrown in jail by now. If we even just traded off an insider tip and all that. But this is the ultimate form of insider trading, if you ask me. You just can't beat it under any circumstances. And it's government backed. That's the worst part.
And then the other one that they're all doing now, and Apple and Tesla, and I'm sure more will follow, is stock splits, which for those unaware, make absolutely no difference to anything fundamental. Imagine you've got a pound coin, stock split comes in, you've now got 5 20p coins. That's literally the only difference it makes. But what it will do is it means retail investors will go, oh, the price is low, now I'll go and buy it. And that is the next one that they're all going to try and do, I think.
How many questions have you had on this topic over the past while? Because I've even had quite a few, and I'm not nearly as clued up about everything as you are, but freaking hell, man. Let me tell you, I've had people asking, oh, so what do you think of the stock split here? And I'm like, it doesn't make a damn difference. No. It's just, as you said, like taking £1 and splitting it into 5, and then you have 5 20p's as opposed to £1 coin. I said, it literally makes no, but do you think the price is going to go up? I don't know if the price is going to go up or down. I just know it's going to be more expensive, but I don't know if your stock is going to become more valuable or not. How am I meant to know that?
It just makes no difference at all. I mean, you've got a cake. You've got a whole cake. That's your one stock. You have a 1 for 5 stock split. Oh, you've just cut that cake into 5 slices. It makes no difference to it, or it shouldn't make any difference to your investing philosophy, whether there's been a stock split or not, to be honest with you. And if it does, you're probably doing this kind of thing wrong. It doesn't make the blindest bit of difference. And the worst thing is the fact that all the media whip it up saying, oh, such and such is having a stock split. Well, great. I don't care.
The key lies in the word split. That's where people need to focus their attention, not on the price, but on the split. That's all it is, nothing more. You're not expanding the pie, you're splitting the pie into smaller pieces.
Exactly that. And if you think about it logically, why would a company, to a random punter who owns a very, very small proportion of their stock, why would they give them free money?
Why would they give anyone free money?
Exactly. It's just not in their interest to do it. If you think about it logically, you'll realize, the flaws in it. But yeah, it doesn't make any difference. It's pointless.
No, but I think what you just illustrated shows a massive difference between professional trading and retail trading. And yeah, technically, I'm a retailer myself. I don't trade institutional money, so you're more on the institutional side. But I think you can still have an institutional mindset, even if you trade retail. I think it's more just a classification of whose money you trade. But you can still think like someone who trades in an institution, like, whoa, this doesn't make sense, or this makes sense, or let's not get too hyped up about it because the average person doesn't know what the hell it is. And I think even a lot of the markets, the up movements in the markets that we've seen have been driven by these Robin Hood retail guys who know next to bloody nothing about anything. They just think, oh, it's low, let's buy, like there's no tomorrow, no commissions. But they don't realize that they're actually paying on margin interest and all those kind of things. It's like, where are you guys coming from? Would you just go to a store and buy a brand of something that you don't know and think, oh, this is a good idea, it looks cheap, let's buy it? Like, no, you wouldn't, would you?
I think the problem with the whole Robinhood thing is if you look at what, and it's really annoying that they've shut down their API, because there was this site called RobinTrack that everyone just spent half their day on, basically, in the finance industry, going, oh, what are the retail punters now buying? It got stupid. They were buying bankrupt companies like Hertz, for example. They declared bankruptcy and then their stock price shot higher. And it's like, Chapter 11 isn't always the end of a business, but if you're a retail investor, you should not be buying a bankrupt company. I mean, obviously, I'm not giving investment advice, but that's just common sense. I think
that's a caveat. We're not giving investment advice here, anyone. Just saying, we're not doing that. Yeah.
I think the thing for me, though, with the whole Robinhood thing, and it wasn't just that, they just became like a mantra for all retail investors, particularly in the US, is that in, I think it was April, maybe May, the federal government sent everyone a $1,200 stimulus check while everyone was cooped up at home with nothing on the television and pretty much nothing to do because you couldn't go out. So what inevitably happened was either those stimulus checks were probably, in the very rare proportion of cases, saved and tucked away for a rainy day. In a slightly larger proportion of cases, they were actually used what they're meant to be for, and relief from the coronavirus. But then a lot of people would have gone, it's free money, let me go and have a punt on the market with it. And it's so easy now compared to 10 or 20 years ago to very, very quickly open up a brokerage account. I mean, I could open an account with a broker while we're on the call now in 5 minutes flat and place a trade straight away without any kind of education. I mean, there might be a few questions to answer, but you can probably lie your way through that. And it's very, very, perhaps too easy for people to say, here's some money, here it is on the market. It's supposedly a way for me to make a quick buck. People were desperate, and that desperation was kind of played upon a little bit, I fear.
Yeah, I do agree with you on that. And things also became very directional. Now, you've been in this game long enough to know that if something becomes too directional too quickly, usually there's a reversal that takes place at some point, especially when you get what I call the LinkedIn pundits. When everyone is short and, some smarter people start saying, oh, time to go short, just stay short. I just think, oh boy, here we go. That turning point is starting to show when everyone is along and more smart people start saying, now's the time to go along. That's when I also just realized, turning points. Now, I'm not saying be a contrarian. I think that can be dangerous as well if you don't know. There are certain points in life where you have to be a bloody contrarian and say, look, I'm going to take a bet against the consensus over here. I mean, that's how Paul Tudor Jones made his money. 1980s, Nassim Taleb made his money the same way, by being long volatility and essentially very mildly long of the overall markets and things. Ray Dalio, just to name a few, they all made it big during those times. And I think what that shows as well is that following the trend is a good thing to a large extent. I'm not saying just go and bet against the trend for the sake of it, but there does come a point where it becomes stupid. And for instance,
I think what's happened is that, the other thing is not just it.
Before Armageddon back in February 2018, where the market seems we have a bit of a break in the connection. Oh, there you go. You're back, Mike. Sorry about that. Don't know what's happening.
Did I disappear? Oh, there. Hello?
Yeah, just for a second. It's fine. You're back.
I'm back.
You're back. You're back.
Perfect. I was going to say the whole trend following thing. I mean, I don't think anyone on the 23rd of March, when the S&P bottomed out, I don't think anyone would have gone, we're going to rally 40% from here. And if they say they did, well, either they got incredibly lucky with it, or they're just blagging with the benefit of hindsight. I mean, I think the thing to bear in mind is that, don't always follow a crowd. It's important to think for yourself rationally about actually what's going on and whether you want to be involved in a certain trade. And the other thing to remember is that not having a position in the market is having a position itself. There's absolutely nothing wrong if you don't see any opportunity out there, then there's absolutely nothing wrong with remaining on the sidelines for the time being and biding your time. And especially now and through August, when we've had, you know, a very quiet month in terms of news, in terms of data, in terms of liquidity, all the rest of it, there's nothing wrong with sitting it out, and actually sitting on your hands and preserving your capital is probably a better move than putting on a risky bet that may or may not come off.
Yeah, 100% agree with you. And one of the key things, not having a position is having a position, you know, so that's lesson number one. And what is your first rule of trading anyway? It's not to make money, it's to preserve your capital.
Not lose money.
That's the other thing that everyone seems to preserve your capital or not lose money. So that's essentially what it boils down to. And that, for me, for instance, is something that I've noticed that very few focus on. And I'm not talking about being a hedge fund per se, but even if you look at many funds, I'm not going to mention any names because I don't want to get sued, quite honestly. But there are wealth managers out there, for instance, who offer you all these freaking funds like there's no tomorrow. Say, oh, invest in this fund or this fund. But when you ask them, okay, so can I invest in a fund that benefits from downside action? You know, something that is long volatility, essentially. Oh, yeah. No, we don't do that because the market moves up over time. I mean, are you proverbially shitting me? And sorry for swearing, everyone. But I mean, that is such a dumb-ass way of going, of looking at it. Because how can you even with a straight face tell anyone that I will offer you something that benefits over the long term, but I'm not offering you any short term, I'm not offering any protection. It's as good as selling you a home and say to you, Mike, oh, by the way, I've got this lovely home for you. And you ask, oh, so Adrian, do you offer any, health insurance or fire insurance or anything? Oh, no. But over the long term, you'll be fine. Are you going to be happy about that? Of course not. Why would you be happy? So portfolio insurance is the same thing, and yet very few seem to focus on it.
Yeah, but because it's not, and it sounds ridiculous, but it's not something obvious to think about. I think when people first, start to get involved in the markets or start to get involved in investing or trading or whatever it may be, they almost see it as a money maker, be it short term or medium term or long term, whatever. They see it as a way of making money, and they don't necessarily realize that they could also lose money. And you almost need to, like we've just been saying, flip that on your head and say, how am I not going to lose money first? And then how am I going to make money? And that's the way people should be thinking about it, rather than going, how am I going to make money, and forgetting about absolutely everything else.
Yeah, exactly that. And I mean, the whole making money thing, we can take it into a slightly different topic right now, is, COVID, for instance. How do you see that COVID has affected everything else, apart from the massive dip in GDP that is as clear as day? We're what, 20%, 20.5%, wherever it was. So we've had the biggest one here in the UK out of all European countries. I think the US was somewhat safe. They were what, 12%, if I recall correctly, around about there. Or maybe a bit less.
So the US the US GDP contracted by about 9.5% in Q2. But just on this, it's become a bit of a pet peeve of mine, because there's a lot of talk about how the UK had the biggest contraction in Q2 out of pretty much anywhere as a result of coronavirus, which is technically true. But if you think about what happened in March, the UK went into lockdown formally, officially, on the 23rd of March. So with 6 days left of the second quarter, when businesses were told to shut and everyone was ordered to stay at home. If you look at the rest of Europe, they locked down 2, 3, 4 weeks before us in some cases. Italy were locking down parts of their country at the tail end of February. So what that means, statistically, from an economics point of view, is in Q1, a lot of the European nations had a much harder hit from COVID on their GDP number than the UK did. UK GDP fell by, I think, 1.8%, something like that in Q1. And then the UK had this massive fall in Q2 because essentially the entirety of Q2 in the UK was spent under lockdown, whereas so our lockdown was essentially April and May, whereas Europe's lockdown was essentially, give or take a few weeks, March and April. So Europe kind of bridged that gap between Q1 and Q2, whereas our hit came entirely in Q2. So I think that's an important distinction to make. But in terms of the virus and the pandemic itself, I think that the way I would kind of describe it is almost like a massive reset button has been pushed on kind of every aspect of life, really, not just in terms of the economy, but people are thinking about, do they go back to the office, for example? Do they work from home? What do you now want out of a home? Because, previously everyone was clamoring to live in central London as close to the city or as close to the West End as they could get. Do people now say, actually, I don't want to live in a city. I want a garden. I want a bit more outdoor space. I think lockdown has led people to kind of reevaluate almost every aspect of their life, really, because one, it's a shock that no one saw coming, and two, they've had so much bloody time to think about it while we were all stuck indoors.
Yeah, absolutely. Jamie actually wanted to ask that very question. What are your thoughts on work from home? And you pretty much answered it, as in, people have a lot of time to think about it. And you're right. I think in the longer term, there is going to be a bit of a reevaluation of what essentially will constitute expensibility. Maybe we could see a flip of the entire thing, where properties outside of London or central London become a bit more expensive due to their bigger gardens and stuff, and inner city ones, as we become more decentralized, become cheaper. Now, I think that's everyone would say, "Oh, come on, Adrian, that's a lot of bogus. How could that possibly even happen?" But and maybe so. But at the same time, everything is based on supply and demand, isn't it? So if there's more demand to move outside and have more space, hey, you never know. It's improbable, but it's possible, I guess.
So demand outside of London for property is crazy. So I don't live in London. I commute every day. I live down in Kent, and chatting to a number of people, friends, family, friends, whatever. And one example, I was talking to someone over the weekend, and they put their house, they didn't even put it on the market. They were talking to the estate agent, getting viewings arranged and all the rest of it before the board goes up outside and everything like that on the Thursday. By the Saturday afternoon, they'd had 3 offers and it was sold. And that is not a one-off. That is happening all over the home counties as people come out of London. Now, I think all this talk of death of the office and work from home forever is misplaced. There was a very, very controversial piece on New York, actually saying New York is dead. There's been similar ones saying London's dead. I think all that's a load of rubbish. The city is going to bounce back. New York is going to bounce back, but people might just not be here every day. People might do 4 days a week in the office rather than 5. Offices may be more of a place for certain businesses. I think, our business, trading, investing, you're still going to have a trading floor. There's no doubt in my mind about that. You're not going to have that moving virtually, but other businesses may operate differently. They may have, employees in 3 times a week for Tuesday, Wednesday, Thursday for more collaborative stuff, and spend the rest of the week at home. I don't know. I think there will be changes, but I think, the city will bounce back, offices will bounce back. It may be tough for a year or so, but I think in the longer run, people will realize they need an office. Because I think what coronavirus has proved is that when there's a crisis, one, humans are very, very good at adjusting to it, as we have, but two, people are willing to give a little bit of leniency. There's almost, we're just glad that a job is being done. We don't mind if it takes a little bit longer or if it's a little bit more difficult to get hold of you during this. But I think what you're going to see in 6-12 months' time is companies are going to have problems hiring people. Because how do you hire someone and integrate them into a team if you've never met them in person? work from home works because me and all my team and all the guys in the business, I know them very well on a personal and on a professional level. We've worked together for years. We've got that relationship. We can take that online. But in 6 months' time, when you've had a bit of staff turnover, you've got new people there that you've never met, I'm not sure that's going to work the same. And also clients. How do you build a relationship with clients in any sector if you never meet them? You just cannot do it. So I think this whole sort of virtual existence that we're living at the moment is fine, it's adequate, and it works to kind of make up for what we are unable to do at the moment. But I think longer term, people are going to come round, and you're seeing it already. I think people are going to come round to the realization that you need an office and you do need to see people face to face, because there's certain things you just cannot replicate down a webcam like we are now.
No, I fully agree with you. And there's how should I put there's a spin that I wanted to put on what you said. There's a difference between decentralization and decommissioning. Maybe the city is decentralizing a little bit, in terms of people working from home and all those kind of things, but it's not being decommissioned. And that's a massive distinction that needs to be made over here. So you can't go. So that hypothesis that I threw out earlier was more just for fun and games than anything else. I mean, I'm not saying it's impossible, but as I said, it's improbable that it would happen, because we are still social beings. We still like being entertained. We still enjoy being part of the action. So if you think that we're just going to change our biology and our evolutionary traits just because of some virus right now, you've got to be joking.
Exactly.
There's absolutely no way in hell that is going to happen. We might just be more careful. We might just be less crowded in some respects, but I think that's about it.
Yeah, and we may continue to wear masks. I know some people who are saying that, once this is over, if I'm ill, I may still wear a mask if I'm going in as a courtesy. That may happen. But I think, and I'm going to throw two massive stereotypes out there now, and I know I'm doing a massive generalization, but work from home for the chief executive, the MD, whoever, who's got a big house in the countryside, they've got enough rooms, they've got a study, a spare room where the kids can work, and a study where they can work, and another room where the wife can work, or whatever. Work from home is brilliant for them because they can have an office set up at home. If you think about, some of the perhaps more junior people within a firm who live in London in a house share with 3 or 4 others, their office has become either the end of their bed or the kitchen table with 3 other people in completely different businesses. So I think that's the other thing, saying, oh, we'll work from home forever. Well, that might work if you run the business. But if you haven't got an office at home, that's going to cause you real problems.
No, I fully agree with you, Mike. I'm just going to turn the video off because I see that there's something wrong with my bandwidth over here, but we're still live, by the way.
Yeah, of course. So I'll turn mine off as well on this side, see if that helps.
Okay, great. So we're still going live and all that. Can you still hear me, by the way? Just want to make sure.
I can still hear you. Yep, loud and clear.
Perfect, great. Great. Yeah, and I fully agree with you on that one, my friend, because it is a case of if you work in a studio apartment, and you know yourself how tiny a damn studio apartments in central London can be, or even just anywhere in London for that matter. It's like a matchbox it's like a matchbox with a door, essentially. And you want to try and conduct business in there, and maybe you live with your partner and stuff. I think eventually you'll either want to try and kill one another or at best strangle one another in some way or form. And I think, and that actually builds onto research that was done by a guy called Michael Burry, who was in that movie
Big Short.
The Big Short. Yeah, 100%. And Michael Burry found this was in April, I believe, or May. He noticed some research that they did in the US that people were actually begging to go back to work because they were getting beaten up day in and day out by abusive spouses. So they actually said, you know what, I'd rather take my chances of getting COVID than knowing that I'm going to get beaten up day in and day out. At least when people were working, the abuse would be like once a day, once every few days. Now it was just day in and day out. So that's the other thing that COVID did that hardly anyone's talking about is the social changes.
Yeah, and I mean, I don't want to get into the whole should we have lockdown, shouldn't we have lockdown, because we've done it, and kind of debating it now is is pointless, really. Not just among us, but all the commentators who are saying we should have done it, we shouldn't have done it. Well, it's done, deal with it, move on. But there wasn't.
I think it was necessary.
There wasn't a lot of thought about the side effects, if you like. So, as you say, it was probably necessary to control the virus and avoid healthcare systems getting overwhelmed and everything like that. What was it? Stay at home, protect the NHS, save lives. That whole message, sums up why we did it. But I don't think there was enough consideration at the time given to other things, like you say, abuse or social interactions and things like that, which perhaps more thought could and should have been given to, maybe.
Yeah, and I think when it comes to a virus as well, what choice did we really have? Because I've also heard the criticism, as you said, regarding, oh, we should or shouldn't have. Look at Sweden. Look at Sweden. It's not all fun and games on that side, people. The data is showing that they did get hit very hard in spite of, well, actually, because they didn't have a lockdown. I mean, it starts to become an ethical dilemma and a bit of a moral dilemma as well. Do you keep an economy going or do you let people die? Do you take a very Darwinian approach and say, oh, well, survival of the fittest? Yeah, that sounds all good and well until you realize that no one fit is actually even fit to survive. Once you get this thing going, and everyone who can work is either ill or incapacitated in some way or form. So rather just keep people at home. I'm of the opinion, for instance, that if this coronavirus hit us even as recently as 10 years ago, we would have been screwed in so many ways. We should be super great. Oh, no, definitely not. We didn't have nearly the technological capacity that we do now. So if anything, incredibly grateful that this pandemic hit us in 2020 as opposed to 2010 or even because it was well overdue. Be incredibly frank with one another about that. There's no way that it wasn't.
No, and the other thing to bear in mind, if we think about lockdown and everything, is it was necessary at the time because we didn't have anything else we could do. Now, there are things we can do. Local measures, track and trace, all that kind of thing, which should mean that we can prevent having another lockdown. But just to kind of bring it back to the market, because obviously you're seeing cases start to rise again in Europe, which is becoming a little bit more of a narrative at the minute. I think the only way you can have full-scale national lockdowns a second time is if you have something like debt forgiveness. I don't see any way that any country can afford to do it again from a purely economic point of view, which is why it's so important to have these other measures in place, so important that everyone, stays 2 meters apart or whatever the rules are in whatever country, because no one can really do it again. It's kind of a one-shot deal.
Yeah, to use another real-world analogy, it's like doing 2 12-round boxing matches, one after the other. We're already pretty punch drunk as it is from an economic standpoint. And you're right, I don't think we could survive a second onslaught. This is going to take quite a bit of time to heal in the first place. So a second onslaught could not only cripple us, it could potentially destroy us. And that will take a long time to recover from.
Yeah, and the other thing to bear in mind is, will there be compliance if it comes back?
Probably
that's
not.
A concern. Yeah, I don't think there. I mean, already you're starting to see things are getting a little bit relaxed. I mean, if you just take the example of, when you went to the shop, when you went to the supermarket, Sainsbury's or wherever, in April, you'd be queuing outside for days on end to try and get in because everyone was making you stay up. Now you just walk in. And I'm not saying anyone's being negligent there. It's just how things have moved on. And it's difficult to see people going back to how it was in March in the middle of winter, when it's raining and it's cold and all the rest of it. No one's going to want to queue outside a shop.
No, definitely not. And, speaking of queues, now that you mentioned that, I mean, even we're queuing to wait for what's going to happen with Brexit now as well, because that's obviously a topic no one's really talking about, at least not in the public eye as much, due to what coronavirus has done. And I was speaking to someone the other day who made the point to me that coronavirus has essentially taken away attention from things that that have not been spoken of as much that should be, and also taken away attention from things that should be spoken of a lot but have not been. I was like, that's actually a very clever way of looking at it. So Brexit is one of those things that should be more spoken of because it's right on our bloody doorstep. December is not that far away, all things considered, and yet I don't know if we're any closer to any form of deal or whatnot. Well, and what's going to happen from there?
I think with Brexit, it's like you say, it's gone under the radar massively this year, especially because everyone's been focused on the coronavirus. I think I still think there is going to be a deal, but I think it's important to recognise that you could leave Michel Barnier, the EU negotiator, and David Frost, his UK counterpart. You could lock them in a room and let them talk until the cows came home. And they still would not be able to reach an agreement. And the simple reason for that is they are trade negotiators, not politicians. And what that means is they are given a mandate, essentially a big folder full of paperwork saying, this is what we want from the EU. This David Frost's case, and in Michel Barnier's case, this is what we want from the UK in terms of a trade deal. Now, I think what is going to happen is there is going to have to be some political intervention. Now, the way I kind of see it playing out in terms of a rough timeline is the next round of talks is in London on the 7th of September that week. I think there's going to be absolutely no breakthrough in those talks, and the negotiators go, we can't do a lot else. Now, obviously, that's going to start to see people panic again about a no-deal Brexit. But I think it's at that point that we will have Boris going on a little bit of a European tour, almost exactly the same situation that panned out in 2019, just after he became Prime Minister, goes and sees Angela Merkel, goes and sees Emmanuel Macron, goes and sees Ursula von der Leyen, all the EU leaders who actually hold all the cards on the continent. There's a bit of wiggle room, and I think then the mandates change and we get a deal done, a relatively limited free trade agreement, but a deal nonetheless, signed sometime early Q4. My guess is October at the moment. So I think that a deal is still going to happen, but I think it's going to be a relatively bumpy road to get to that deal. I think we are going to see talks at least reach a stalemate, if not break down completely, before everyone kisses and makes up towards the tail end of the year.
Yeah, I agree with you. And I think it's also this whole notion of being a hardball, because for some reason we think that when we negotiate with another party, we need to be as hardball as possible to get exactly what we want. Well, they don't get what they want. And it's a very silly way to approach it, but that's often how it feels, as opposed to just saying, look, guys, this is what happened. This is what the people voted for. You still want to do business with us. We still want to do business with you. Let's find the best, most amicable solution. How about that? But exactly. Clearly, no one's really keen on that. I mean, you don't, Mike. To me, the thing is though, you can't go and give people a choice, and then they choose, of option A and option B. Then they choose option B, and then you are peed off with them afterwards for that. How does that work? You gave two possible outcomes to two possible choices. And, the second outcome was chosen. Maybe it's not the one that you wanted, but at least still keep doing business, for God's sake, as opposed to finding every possible way not to do business. No one wins from that.
Yeah, and I think the other thing that everyone needs to bear in mind is that, coronavirus has obviously been a humongous economic shock. It is in no one's benefit, whatever your political persuasion, it is in no one's benefit to go and have another massive economic shock at the end of the year. And, it is going to be an economic shock to both Europe and the UK. It's going to impact both. It's not going to be a one-sided reaction where the UK is impacted and the EU gets away with it absolutely fine. That's just not going to happen. So I think,
thank you.
rational thinking will prevail, and something will be pulled over the line, maybe kicking and screaming, but an agreement will be done.
Yeah, I fully agree with you. It is just rather crazy how they drag things out. But then again, as you said, they are politicians. They're not deal makers. So maybe that's where the problem lies to begin with.
Yeah, maybe. And obviously the other thing is, because it is a political thing, there needs to be, someone needs to be seen to win. Almost someone needs to be seen to get their own way, and it needs to be framed. Very, very similar to the negotiations over the EU recovery fund, very, very similar to the talks over the stimulus bill in the US. Both sides, or all sides, want to be seen as having won from their point of view. So there's a big question around how do you frame any sort of deal so that both sides can kind of sell it to their electorate, if you like.
Yeah, and that's always the damn problem with the politicians as well. It's like what my friend David Bell from Macroaphrodisiac said. The politicians are here for such a short space of time, and one of the issues that we have with them too is that they are doing everything that they can to get re-elected. That is pretty much their main mandate. So whether it's in your best interest necessarily is not really what's on the table over here. It's whether it's in their best interest to get elected. So while giving the people the feel that, but that's another story altogether. Let's not delve too much into the political realm. We'll be on here all day if we actually do that. But, speaking of politics, we obviously have another major thing that is happening this year, and that's the US elections, which also to some extent has been kept under wraps a little bit. Maybe not as much as Brexit, but it's not the main topic at the moment with all this virus and everything else that's going on. So what are your thoughts on what we are likely to see?
So I think, my first thought, and I don't want to get political, is, are these the best two you can muster up? You've got a population of 350 million, and we've got a 74-year-old and a 78-year-old when they take office next year, running to be president. But we'll put that aside for 1 second. I think the race is still pretty open, to be honest. I still think that although Biden leads by roughly 8% on a national basis, if you look at the swing states, which are the ones that are going to decide the election, some of the key swing states are beginning to move back in Trump's favor. And I think the sort of disorder that you're seeing at the moment, particularly around the police brutality and everything like that, this is feeding into the Trump's campaign, the Trump campaign's kind of key message of the Democrats will not keep you safe. So I think there is a very long way to run in the campaign. I think if the economy can recover in any kind of meaningful way, not necessarily meaningful in terms of, economists not being able to pick holes in it, but meaningful in terms of the Trump campaign being able to sell, record GDP growth rates to the US electorate, I think he's still in with a chance. I'm not prepared. I've seen some people writing him off already and basically putting Biden's cabinet together. I think they're kind of jumping the gun there. But in terms of a market point of view, I don't think anything is really priced in. I don't think a Trump win is priced in. I don't think a Biden win is priced in. But of course, the key thing to remember is whoever is president, they will not be able to do anything unless they control the Senate. And at the moment, it's pretty much a toss-up who gets control of the Senate. So even if Biden were to take the White House, if the Republicans hold the Senate, then the first 2 years of his term, he's not going to be able to do anything anyway.
Yeah, that's actually a good point. And in my personal opinion, I think Trump is more likely to win this election. And the reason why I say that is because Biden's not the strongest candidate I've ever seen. He also has made quite a few gaffes. Now, we can argue the points and say, oh, well, Trump made plenty of gaffes during his election campaign back in 2015 or 2016, and he still ended up winning. So maybe that's not a determining factor over here. But the other thing is that I don't know how correct this statement is, so please correct me if I am wrong on it. But I recall something being pointed out to me a few years ago, that in any election year when the stock market was down for that year, no president has ever won a re-election, or rather an incumbent president has not won a re-election. So if the stock market is up, maybe that also improves Trump's chances of winning the re-election. Because people might feel, oh well, he's still pro-business. He's got the economy, and which I think is a lot of bogus, to be quite honest with you, because he already inherited a very good economy. He just implemented that tax policy, which boosted growth a bit more by lowering the corporate tax rates to 21%. So that's not really what I would call having a handle on the economy, so to speak. I don't know what your thoughts are on that, but that's, to me, is just like changing a policy and seeing how it works.
Yeah, I mean, I think that the thing to remember, and you touched on it there, is the advantage of being the incumbent cannot really be overplayed. The fact that Trump can stand there with the presidential seal on his lectern, he can, sign executive orders, try and get things passed during the campaign. I don't think that should be underplayed. That will play, a big role. And if you just look back, the last time an incumbent president didn't win a second term was 1992, when Clinton beat Bush. But that was after 12 years of Republican rule, because you had Reagan for 2 terms, and then you had George Bush Sr., as it was, following him for another 4 years. So I think the advantage of being the incumbent, the advantage of being in the Oval Office, campaigning from there, campaigning all around the country with Air Force One in the background, et cetera, I do think that has a psychological role to play. And the other thing is, and I know this is not a normal year, this is probably not a normal election, but if there is doubt in people's minds, they will generally stick to the status quo. If people are nervous and worried, they generally won't vote for a change. They will generally just say, we'll carry on with more of the same, a known quantity, if you like. So I tend to lean towards Trump as well at the moment, but we've got, 68 days until election day? That's a hell of a long time to go.
I think so too, and it does boil down to a case of the devil you know versus the devil you don't. And we have seen Biden in the Oval Office, although in a VP capacity, not as a presidential capacity. And as we both know, a vice president is more of a ceremonial role than anything else. They have no real executive power to begin with. So no one actually knows what a kind of guy Biden really would be. As it's like this brilliant saying by the late Abraham Lincoln, when he said that if you want to judge a man's true character, give him power. We know what Trump is like when he's got power. He's drunk with it as hell. It's like I don't know if you are a fan of the Lord of the Rings movies by any chance. Have you seen them?
I'm not. No.
Okay, but in the Lord of the Rings movies, there's this ring of power, and anyone who touches the ring of power goes completely bonkers, absolutely drunk with power, consumed by it. And I think we've seen Trump is an example of someone who has touched the ring of power and he's gone bonkers with it. We don't know what Biden will be like, and I think that might also scare quite a few folks. And they'll have a bit of a dilemma where they need to decide, does their hatred or dislike for Trump, is that enough to make them want to switch sides and go to Biden, or will the fear of Biden's probable how should I say this, unpredictability cause them to stick with Trump? That's a question.
Yeah, and I think this is something that is going to become clearer as we go through into November. But then you've got the other problem of opinion polls. We've seen in countless elections where opinion polls are wrong, quite frankly. They just don't tell the story of what's going on. And is that going to be the case once again? And how does that impact the market? And actually, a point on this is, excuse me, a lot of people are using betting markets to predict what's going to happen, not just with the election, but with a lot of things. And I think it's important to remember, and I've been guilty of it, but it's important to remember that, a betting market is not made, and I've heard bookies say this, to give financial markets a perfect steer on what's going to happen. A betting market is made so that the bookmaker makes a profit. So people who are looking at betting odds going, oh, Biden's got a 70% chance of winning or whatever it is. Well, remember that the bookie is trying to make some money out of that. So, take all the inputs that you can and come up with a kind of holistic view. But even then, you do need to be, I would say, a healthy skeptic of what's going on.
Yeah, you have to be. I mean, if you're not a skeptic, you're just a sheep essentially, and you're just following the crowd. And while that strategy may work some of the time, it definitely won't work all of the time. And I think we've seen how the betting guys can get it wrong. Look at 2016 with Brexit. Look at even the Clinton-Trump election campaign, how they got it wrong so badly over there. What was that team that had 1,000 to 1 odds against them? Leicestershire or Leicester,
Leicester to win the Premier League.
Yeah, exactly. Another prime example. Who the hell in their right minds would have thought that they'd win? And they ended up winning. So you can't just, as you said, you can't just look at the favorite odds and assume that is going to be the outcome, if I can use that word.
Yeah, no, I completely agree. And you just need to be, well, this kind of circles back to what we were saying at the beginning, that the first thing you need to do is to, not lose money rather than try and make money necessarily. And this goes back to the election, make sure that you are kind of protected before venturing down a certain path set on your view.
Yeah, 100%. And know what you're dealing with. And, as we said in the last podcast episode, you don't need to understand all the dynamics behind something to be able to profit from it, but at least know how to differentiate between what is relevant versus what is irrelevant. And I think that is one of the key things over here to be able to distinguish. Because if you can't do that, then you are literally going to end up in a world of pain. And that's the last spot where you want to be. So, Mike, I just checked the time. Any final thoughts from your end that you'd like to convey?
I guess the last thing I would say is, the first 8 months of 2020 have been quite the roller coaster. So nobody, no matter what they can tell you, can predict what's going to happen in the final 4 months with any certainty. I mean, we can all have a stab at it, but at the end of the day, it is just that. It is a bit of a stab. So, strap in, because I think it's going to be a bit of a bumpy ride, and that's going to continue for a while yet.
Probably will. I agree with you. But Mike, thanks again so much for coming on the show and for sharing your inputs. It's always a pleasure. I would love to have another discussion with you sometime in the future. Always a pearl of wisdom that I get to extract from you. And
thank you very much for inviting me on.
Yeah, it's a pleasure. It's an absolute pleasure. You're always welcome on, and I wish you the absolute best, with the rest of the year. Obviously, I hope everything goes smoothly and really well. And we'll chat again soon. Perfect. Thanks, Adrian. Have a good day. Cheers now. Thanks, and you too, Mike. Cheers, everyone. Thanks for watching.